In 2025, if you are looking for the best large cap index mutual fund, then this video is for you. For all the time, people have been thinking that Nifty 50 is the best index to invest for large cap investors. But here we are going to discuss a new index, an index which is made by NSE itself, which is now being preferred by the largest investors in India. Okay, so let's go ahead and check it out. So in this video, we'll quickly look at what is this new index that we're going to talk about, which is better than Nifty, better returns, and even lower drawdown and even better ratios. We'll quickly look at what this strategy index concept is, and then we'll also get into how you can get started if you're interested into investing in this index. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So the index that we are going to discuss today is Nifty50 Value20. So yes, as the name suggests, it is from the Nifty50 universe. What does Nifty50 mean? It is the largest 50 companies in India. Then what is the next part of the index's name? It is Value20. So out of the largest 50 companies in India, this index selects the best 20 value stocks in it, and it decides to invest into those stocks. And with this method, you're getting a higher CAGR along with better drawdown numbers, better standard deviation, better Sharpe ratios. Everything is better compared to Nifty 50. So I understand for most large cap investors, especially for new investors who are coming into the market with a lot of expectations, they often don't want to risk so much of their capital. They want to invest their funds into good companies without having much drawdown as compared to the rest of the market. Right? Again, you're coming into the stock market. There will be ups and downs. There will be times when the any index, even Nifty 50 or even this Nifty 50 Value20 index might go down. But again, the numbers and the stats say that this index is supposed to be more stable than Nifty while giving better returns. So let's get into the fact sheet to understand it better. So this is a fact sheet of the Nifty 50 Value20 index. So as we discussed, it is a diversified portfolio of value companies forming a part of Nifty 50 index. Okay. And if you want to understand what is value, we'll quickly get into that as well. So as defined by NSE, the stocks inside this index are selected on the basis of ROCE, return on capital employed, PE ratio, PB ratio, and even dividend yield. They look at all these criteria, then decide to put a weight to each of these criteria, right? So there will be some stocks which have really good PE, some stocks which have really good PB ratio. So after you look at the weightages, which is in this ratio, you get all the top 20 stocks from the Nifty 50 universe, and then this index decides to invest into them. And this index is reviewed every year in December, and based on if there are any changes every year, the stocks will be rebalanced. Okay, so hope you got the point. Already a good universe, which is Nifty 50. Again, from that, you decide to even lock in further down and come into a much better index, which gives you much better numbers. So when you're asking me what is these better numbers, you can look at the total return, right? Total return over the last 5 years have been 24.26% CAGR, while Nifty has given only 21% CAGR in the same time frame. Okay, that is about returns. My point is, if you're going to invest in this index, it is not just about returns, it is also about the volatility. And how can we track the volatility? It's through tracking standard deviation, which is 18.13 since inception, slightly better than Nifty. Beta value is better than Nifty. Again, the comparison is with Nifty itself. Anything that is lesser than 1 means that it is better than Nifty. Okay, beta is better than Nifty in both since inception, in 1 year, 5 year, everything it is slightly better than Nifty. So what do you see here? Better returns as well as slightly lesser volatility numbers. So why not think very, very strongly about investing into these index funds? Okay, so before we go on, I want to quickly introduce you to this entire new concept, which is index funds based on certain strategies. So NSE has come out with this strategy index fund concept. What is the idea here? Just like how you select Nifty 50, it is based on certain criteria, based on market cap, based on liquidity, based on a lot of factors. Just like that, why don't we expand the universe of our indices by introducing more factors, by introducing more rules? And then we can decide whether these are better, whether these are investable, and then we can present it to the entire world. So based on this logic, NSE came out with, I think, nearly 100 strategy index funds. But not all of them are investable yet. I'll quickly show you through the sheet that I made here which is a world of investable strategy index funds. So what can you see here? Nifty50 equal weight. As the name suggests, it is an index fund which equally distributes money into all Nifty50 stocks. Then when you go down further, you can start seeing more factors. So what is a factor here? It is Nifty 500 Value 50. It's another index fund, but here you can see the word value. Just like that, NSE has low volatility, NSE has momentum, NSE has alpha. Again, momentum is there, alpha is there. These are stocks which tend to outperform inside their indices. So you see where I'm going. There are multiple factors that NSE has introduced. I'll give the entire document PDF right from NSE in the description. But you can see that out of all of this, the index that we're talking today is very specific. It is a large cap mutual fund replacement that you should consider into your portfolio if you want the stability in it. So then the question is, are these index funds, are they good? Let's take the case of Nifty50 Value20 to explain. So you can see here that the index was launched in 2014. It is having a proper backtest from 2009. And if you go to TradingView and you search Nifty50 Value20, you can even find the chart of the index for the last 10-15 years, right? So I showed you the numbers. I showed you the index name. I showed you the concept and even the backtest data for the same. Now the only question that is remaining is, if you're interested, if you think this will fit into your portfolio, where do you invest? Because as we know, you can't go directly invest into Nifty50. You have to do so through an index fund. And here, Nifty50 Value20 also has some index funds which are tracking this index. Let's go ahead and find them. So you can come into Coin, which is Zerodha's mutual fund platform, and you can type in Nifty50 Value20. Okay, Nifty50 Value20. So what are they? 2 Nippon India funds and 2 ICICI Prudential funds. But here you might be confused. The AUM of both Nippon India funds are very similar, and same is the case for ICICI as well. So you can see the difference here is in this word. Here you can see it is growth. Here you can see it is IDCW. Okay. So as a long-term mutual fund investor, you should always be going for the growth mutual fund. Again, we've explained the common mutual fund mistakes that people make in a video here. I'll put that in the I button. But the idea here is that IDCW means that you'll be getting dividends from your investments. But if you're a long-term investor, do not go for that. Go only for the growth option. So let's open Nippon India's Nifty50 Value Index Fund. So you can see that the starting of this index is from 2021 and it has given 14% CAGR over the last 4 years. Right? The expense ratio is the catch here. It is very, very low. Expense ratio is only 0.25%. That means every year you're paying only 0.25% as charges to this mutual fund, and the exit load is 0. You can exit any time that you want. So again, if you're looking for something more aggressive, something that can replace your flexi cap or your small cap and mid cap funds, I've done a detailed video on a similar strategy index fund. I'll put that in the I button here. Make sure you go and check that out as well. So if you like the video, make sure you hit the like button. If you want to learn more about these strategy index funds, I'll link a video down below that we have made in this channel. Go check it out if you're interested. So hope you got a lot of value from this video. This is Ajay Ajith signing off. See you all again. Bye bye.